Dump any other people's systems. Dump. The only system that you will be successful is going to be your own system, period. Goal is to help you come together. But I can share with you what helps me, because I found that when I look at somebody else trading systems, it doesn't help me. Or I need to learn from somebody, but what they do and how they use their own system is not applicable to me. So the biggest number one challenge is how to tie your personality. This is my idea. How to tie your personality, you personally, into the picture, into the system. Because without the ingredient that's called you, nothing gonna work. That the way you trade, that I know that other person is not. When I teach people, students, then I notice that they don't trade the same way, even the same system. And one of the biggest challenge for the traders is why traders switching from one system to another, from one system to another, from one system to another, and always chasing, because some people blame you. You couldn't sit tight in your own chair, stick to one particular system. You a bad person. You don't have enough guts, willpower. And I'm telling you, it's not correct. There is a map in your head. There is a certain way that you look at the charts that nobody's seeing the beauty of that makes sense. Nobody can show it to you unless you seeing that what you want to see on the chart. I have a friends who actually trade pretty well, millionaires. And what I found that they trade the absolutely simple system you can imagine. You think that the people who makes insane money, they trade such a complicated, sophisticated systems that you need to learn it a year or two or five. No, you need to practice a year or two. Yeah, because you will find intricacies that otherwise you couldn't see and feel them from the practice. But to learn the system, it takes 15 minutes, guys. Most of the system that I know from my friends who makes absolutely insane money on a daily basis, year after year after year, they trade super simple, and the simple is the key word. And that's why I'm here for. I want to tell you guys that if you copy somebody else, that's good for start, because we're modeling, right? We modeling behind somebody else, right? That's the simplest, the fastest way. You find something that works and you grab it and you use it. But then if you never add your own personality, you need to have the system that you fall in love with. I know I'm preaching to you, but this is guys, this week, I didn't show it to you, but I made another 100%. I made 4 or 5 trades, 100%. I don't trade every day. Most of my millionaire friends don't trade every day. They trade the perfect setup. And my goal is to help you to come up with the perfect setup that belongs to you. This is the most important ingredients. When you find a perfect system, then why this system is perfect? Because you weigh the perfect conditions and then you execute the perfect conditions. And then you're oh, it works. Then you're oh, it works again. Oh, it works again, again, again. Yes, it works. And then you're dude, I can increase how many contracts I step in. And you can scale from 1 to gazillion number of contracts you're playing, you entering in. You're not playing, you executing. And then you're gonna that's exactly what you do. You scale something small but perfect. Okay, now Everybody knows my story, right? There's a reason behind my story. There's a reason why people always ask me my story. Could you tell us? One of the things I found, what is the easiest things to trade is the pullbacks. That's the first time I start making significant money with trading pullbacks. And then I was doing it on the day trade while I was day trading inside of the day. But then when the volatility changed with the higher volatility, it's like really easy to get you stop wasted, stop losses. Then what you do? And I'm sharing with you my journey. My journey is I ask myself a question. What is easier to control? What do I control? Because if you don't control something, you don't have a system. Is that easier to control the ranges during the day, going up and down, going up and down? I'm gonna pull this where it is. I'm gonna pull up it's supposed to be somewhere like the chart. And what is easier to control? And this is the key question for me. What can I control easier? Let's say I found this is like real life right now. It is the gold. Okay. This is the gold on the 1 minute. And take a look how many challenges. If I found that this is really actually support, this W is a support. Isn't that nice actually? Yeah. Pre-market. That was a support. Then long extension, this long extension, what does it tell me? That the price will come back to the beginning of that extension. This is the support, right? First time, and there's a W inside of that, and there's another W, like a larger scale W, and boom, we spring up. Let me ask you the same question that I ask myself. What is easier for me to control? If I do a price action, then you see there's another W right here. There's a bunch of them, by the way. Okay. There's a bunch of structural points right here. You need to know the structure really well to trade in this inside of the day. When the price is actually going even higher, so we broke the structure once, second time, three time, fourth time, I'm like, oh, okay, we're going up. But then all of this movement is we collected on the way back, and then we're like going on a sidewalk right now. We're going on a sidewalk. This is the sidewalk. Do I control it? Can I predict it? Was easy for me to predict it during the day or inside of the very small period of time? And my answer was, it's really the price is moved up and down because there's a bunch of participants, because there's a news, because there's a market maker, because there's a whatever, gazillions of institutions from other side of the planet trading this particular instrument, okay, gold. For example, you can do it with S&P or whatever, it doesn't matter. But I can control and understand the situation much easier if I take any like small chunk of it, like this chunk, and analyze this chunk. Or I can take this chunk, this range, and analyze that. Or I can analyze this W as a support. So trading inside, not inside of the day, but inside of the 5 minutes is much easier because I can control it. And the way to control it, guys, that's not by error. I put this chart on the screen because if I trade, and by the way, the most powerful traders are born, and I can confirm you again, again, again. It is when a person combines two things: price action, plus volume data. Okay. When you combine it, it's like you have two wings of the airplane, or the bird is flying on two wings. Because like right now on this screen, what do you see on the price action? You can guess like, oh, maybe there's some value, less volume over here because this is a fair value gap by freaking fucking ICT. Fair value gap, right? But the same terminology on the volume, if you take the footprint, this is actually a part of the footprint. It is an imbalance. And it's calculated imbalance, by the way, out there. Now, if you put the volume profile right here, what you're going to see? You're going to see gap in volume right here, gap. And one of the key principles to use the volume profile, which you probably never seen that I use, but I do use it daily. And we have it in our software in our first package. The price is coming or price is moving between the largest volume, the density, and also between the gaps. That's all you need to know about the volume profile. You don't need to take there's one guy is selling his volume profile course. It's called $15,000. I can name you a pretty well-known guy. You don't need this. There's only two things you need to know. The volume profile show that price moves between the gaps in volume and the highest density points in volume. That's it. If you understand only these two principles, you know it. Now, regarding the price actions, there's not too many things to know. Structure. Structure shows a trend, but if you long time enough, you understand the structure is the trap. The structure is the trap. And unless you're seeing the trap, you're not entering. So there's a bunch of people. If you watch lately interview with the people who make insane money by trading, some of them in the last 4 weeks, whatever, I don't remember exactly, was saying, I don't trade until, let me take this out, until I see a inducements. Was the inducements, or it's basically a stop swipes, whatever you said, or liquidity grab. What is liquidity grab right now on this screen? We're going to go to the other charts, right, in a second. But what is the actual liquidity grab right here? Liquidity grab is this is the top? Yeah. And this is liquidity grab? Yeah, exactly, because that was the break of structure. Now, if we take a closer look over here, like at this very top. So my point is there is just a few things you need to understand from the price actions. 4 or 5 things, and you're done. If you always keep it in your mind while you're trading other side, the data volume, but you keep in your eye the structure on a larger time frame or a smaller time frame, but you just jam it, so you can see all of the wrinkles. Some people trade like not a time frame, but the other bars. But then you need to understand why you change to Renko bars or the ranges bars. You need to understand the difference. If you're simply copying somebody, you don't understand that the wrinkles in time shows the wrinkles in the structure. If you don't see the wrinkles in the structure, how you can trade the price action? You can. Structure is one of the things that it's a must to know. But there's only 3, 4, 5 things to know. You need to know what kind of points to look for, and that's one of them. Like, look, this guy, he was doing an interview. I'm not going to give you his name. You probably watched his interview. He was saying a week or two ago, he was saying, until I see this inducement, that means we bluff. The charts are bluffing that we're going this direction while they're not going there. The other way to say it, there's a trapped buyers right here in this circle because they want to go higher, but they like trapped out there and boom, the price went down and margin calls over here moved the price significantly lower, even faster on the margin calls. Okay. And he's saying, until I do see the, like this, you see this really small wick, until I see this kind of like a break, because the main look, I'm gonna give you a very quick review that when we're seeing a range, this is the range, right? It can be a different shape of the range. It can be like the triangle. It can be whatever it is. Doesn't matter. The price is the equilibrium of the price is in the middle. It is physically and geometrically in the middle. You can always check it with the overvaluing profile. You will just like, what? And the gold specifically love this kind of geometrical structures. Now, this geometrical structure, this equilibrium is the point where the price will attack on both sides. Okay. But right now, it's not I shouldn't talk about that. Now, what is the price going to do? The price is going to, if you in a price action, I have to make it like quotes, okay? If you in a price action, then the people in the price action by the ICT, they believe that their liquidity is sitting here and they saying their liquidity is sitting here. You and I, we know that they shouldn't call it liquidity, okay? But they do, because that's the maximum that in their concept and their mind. We actually can see where liquidity is. Actually, it's sitting there or not, but they don't know better, okay? Now, and the price is, the classic way for the price is go and hunt for all of this liquidity and that liquidity. And how the price is doing it? The price can go ideally 100% to the top of on the left, and then move down and grab that liquidity on the bottom side. Okay. So meaning the price is going to go this way and then going to go this way, or it can go this way and then it's going to go this way. And the most popular system now, it's a system smart money. Inside of that price action system, they teach that the reason for this classic way of moving for the price, because the price want to get this liquidity. That's maximum of their mentality, guys. That's a limitation. They think that's an advantage. But anyway, the movement is actually correct. Okay. Sometimes the price can go only, let's say 50% one direction and then 100% another, or opposite. So there's a drops and there's a double drops, and I have a course where I teach all of that. Okay. Anyway, now, until the price, what is the best way to enter into any, let me open the Dixie, right over here. This is the Dixie, right? Daily candles, right? Daily candles. What do we see on this? What is the best advantage point to enter into the trade? And it can be on any time frame. This is daily time frame. But you're seeing this structure repeat itself like so many times. And what I teach, it's called the price always have an objective to reach. When the price is, there's a 3 or 4 points in objective can be, okay? Now, when the price is reaching that objective, then it's just a goal in opposite direction, because it's already achieved their goal in one direction. It goes to opposite direction to the main train, towards the main train. Okay, right now on this very screen, you see when the price is doing this, then it's a good idea to go down and trade lower, right? That's the advantage point. So there's so many, not so many, the trader that I refer to, he's saying, until I see this kind of like an inducement into the opposite direction, like the main trend is what? The main trend is going down, right? The main trend is going down, and you see like this structure, okay, right over here, in this structure, right over here, in this structure, right over here. But now, in this structure, like, yeah, I can make it larger. This is the daily candles again. It's like but the same principles on every single. Okay, let me make it larger. Okay, like this one. You see, this is the best advantage point. But how to start your trades from this very advantage point? The price action people guessing. Oh, because the structure is this is we're gonna fill this gap, or we're gonna go and higher than this top, or higher than this. They are always guessing. Guys, I used to trade, and I have the record on my channel, on my other channel, where I put my stop loss 5 ticks. 5 ticks, half a day in advance, using that very system. It can be precise, absolutely. Absolutely. If you train your eye enough. Okay. So the second one point is your personality. Second is your eyeballing. If you don't have eyeballing hours on the one particular instrument, forget about that. The hours you eyeball, and you think that I don't see anything, unless you will start seeing that, and you're just like, the chart will gonna jump on you, and the chart is gonna tell you a story simply from the price action elements. So each element in the price action bar and whatever, it is a story. You need to learn the story, but the chart is gonna tell you the story instead of you asking what's there. Okay. Is that possible? Absolutely. But then look, I put in front of you this gold, right? This gold is on, oops, where's my gold? On the 1 second, right? 1 second. Oh, 1 minute, 1 minute. This is the 1 minute, right? Now, let me take out this 1 minute and show you. This is another chart. This is another chart. Although I'm using not a 1 minute right now, this is a 2 minutes. How do these people in a price action? Oh, I need to take out some stuff. Just a second. Let me go to the indicators, and I'm gonna hide. I can illustrate it later. Hide something. Okay, visible. Make it invisible. Okay. How the price action people understand why the price is stopped here, or not lower or higher. Okay, let me see if yeah. Well, now this is a lifetime, guys. This is the lifetime chart, and I'm not like picking and choosing. This is the exactly lifetime chart, and on the 1 minute, this is the 1 minute on the gold, right? So I stopped using this paid version. Why? Because there's no point to pay for this software. Okay, this is exactly the chart, right? This is exactly what you're seeing on my other chart. Right here, okay? So anyway, but there's like, you can clean up this chart, and you will see the same kind of things. Just a second. Oh, oops, I didn't remove the other indicators. So let me remove it. Okay, just a second. It shouldn't be. No. I want to see the heat map. Is that, guys, something that clear to you? Do you have any other questions on the way? Oh, it's a live dome. So far, or you want me to keep going? Please write your comments right now while I'm doing this. I need your feedback. Do you want me to keep going? Because now we're gonna move into why in the hell we're using the volume indicators? Okay, because the price action people I'm going to turn the MBO, okay? I'm going to turn the MBO on this chart. Volume, price action people don't see what you can see. First, you have a footprint, right? This is the footprint chart. One second. By the way, I need to drink some of my drinks, and I need to get some minutes to rest a little bit so I can compose myself. And so now, look. Should I make a picture? And it's probably I can draw easier on the picture. Oh, that may be actually a really good idea. I'm gonna make a screenshot, and on the screenshot, where is this? Where is this? Okay, I'm gonna. Okay, this is gonna be window, and it's gonna be this one, and it's gonna be this one. Okay, here we go. Now, you're gonna see the same chart. Okay, now, what does the price action people think and they hypothesize? Okay, let me take a fat yellow. Okay, this is the structure, right? This is the structure. So the smart people, smart money people, they say order flow. By the way, this is like I mean, I can't believe that the ICT and other people from the price action use the terminology from what they actually don't understand at all. They don't even see. They're saying an order flow because what they mean in the price action, it is the flow of the price. That's what they mean. By the way, let me warn you that every person online right now, you, and me, we use different terminology. Don't think that everybody is using the same terminology and have the same meaning. Okay, not at all, even close. So the people in the price action, they use the word order flow, but they mean price flow in order. They don't mean orders, how many orders and volumes it flows. No, because flow in the market, it is interaction between two levels, level 1 data and level 2, between aggressive and the passive. That's the footprint is registering actual data. Now, interactions, but they okay, now they guessing on this picture what they're thinking. Oh, if the price is still like, let's say if the price is, let's say we don't see this side of it, okay, let's say this is like block out yet, it's like it's not in the high sign yet, okay, then they hypothesize that the price needs to come and fill out this value gap, right, this one. And so they're like, okay, price went down. That was extension, even more. Then the price made what? Inducements and went back to what? Fill out this gap. That's their logic. Is that right? Yes. On the surface, it's right. But then how could you explain me that the price actually went even lower, hit the same point out here, but we already left this point here, and then it went in even higher because this is the range. Oh, now this is the order block, according to ICT, whatever, smart money. Oh, okay, so we came to mitigate, that's a terminology, to touch, simply to touch the order block and close the orders that were still open by the market maker or by somebody else because there is some trapped buyers sitting right here. I can tell you, there's a more trapped buyer sitting right over here. Very obvious. This is an absorption. So the buyers were absorbed. Okay. Why the price didn't come over here? Price will go there. But the people on a price action have no idea why. Now, because you and I, we're using data-based indicators. Okay. By the way, I deviated from my plan. I wanted to tell you one little things. If you trade, your system can be super easy, like the one story that I told a gazillion times, and that was, and that's how I've got like very positive that I can make money, and this and I was using only. Okay, let me move this. How can I clean all this crap? Uh, uh, because what? Let me drink a coffee. I wanted to show you something, and I forgot the train of my thoughts. Okay, okay, guys, give me a minute so I can compose myself and think what I was trying to explain to you. Oh, here we go. Here's what I was using. The price on an euro was going down on a large time frame. Any moron can make, even my grandma and her cat can make money when the price is single directional and going month after month after month. This is going right now because the dollar is going down, euro is, or the whatever the other currencies, they must go higher because this is the politic what the Mr. Orange in the White House is doing. Okay, they're lowering the dollar, and that's a politics. The lower the dollar, the lower the dollar, the easier for other countries to buy it from United States and export it to them, import it to their countries. So that's a politics. So, and now that's what the dollar is going down, down, down. If you want to trade, anything associated with the dollar, you know, it's going to be a long time and it's going to repeat the same things. But now, and that was the premise that I wait until there is a pullback, the strong impulse against the main trend, and then price going on a tangle on the in some corridor on a sidewalk. And the reason I enter right here because of the EMA, the cross section of the two EMA, it was 14 and 50 on a 1 minute or 5 minute. Okay, right here when they cross, that was the signal for me to enter. How sophisticated is this freaking system? And I made tons of money. I experienced it a lot. You don't need super sophisticated system. All you need is to understand the price action, and you need to read well the volume indicators that in front of you. And when you tune up your indicators, that gives you a hint that you want to see, because many people like, hey, like, could you give me a template? Yeah, I can share with you my template, what I have for Heatmap or for whatever. Yeah, I share it. But do you know that I tune my every template like 3 times a day, except the gold? Gold is like, I don't even tune that because the gold is like equal volatilities all around. Okay. On all sessions. That's really funny, but that's easiest. And the volatility on the gold is not that high as on S&P and Q in the last, I mean, a few months when the Trump started doing the you know, this economical nightmare. Okay, the volatility was just like jumping up and down. It was so crazy. And with that crazy volatility, you can't trade because your stop will be taking like in a split of second. You will lose everything. And most people lose it. Most people lost it. Okay. That's why I switched to gold, and now I'm kind of see that volatility on the S&P or NQ is coming back. I can switch back to those indexes as well. Now, but how sophisticated is this freaking system? My friends, I'm giving you directly with their permissions. My friends are telling me the easiest way to trade is a pullback, and this is the pullback. You trade it over the main direction when you see the strong impulse against, okay? And there's a reason why there is a strong extension against. But anyway, it doesn't matter. There is an extension or impulse or whatever strong against trend movement. You wait, and then you wait sidewalk, and then you trade down, and the signal is EMA 14, EMA 14 and 50. You want to make money? This is the system for you. If you don't want to spend any penny on anything, that's what you should do now. Okay. If you are not confident that it works, check it. I check it and I check it, and I made tons and tons and tons of real money. And there was a group, I told you, like 120 people was watching me every single day, was making screenshots, and they couldn't believe, because I was making money with the same system that they were not able. I'm like asking you, hey, what's genius about me? Okay, let me come back. That I wanted to share with you, and now something that you need to write it down. You need to have rules. One rule is your general business rule. My general rule. Don't think that I'm just giving you water. We're gonna go to the volumes in a second. Okay, we're gonna go to the volumes in a second. Don't worry about that. Now write it down. You need to have a general rules for the business. The way that my number one rule for the business: when I trade, nobody enters in my office or in my room. Not even wife, no kids, no grandma, nobody, no friends, zero, zilch. No one should know what I do. They will never believe, and they will never trust what they're seeing on my screen. And they will always ask, "Oh, did you make money today?" Like, fuck. When they push you, and it's psychological nightmare when somebody asks you, "Did you make money today?" You shouldn't trade because they're asking. You shouldn't trade because they're looking. This is number one rule. My number one rule: no one seeing my monitors. I'm only the one person on the planet. If you share it with your wife, your kids, your friends, blah, the only friends you can share it, that's another trader for a long time. Period. This is psychologically a big mistake. Okay? Because you need to develop your own system, not to prove other people that you can make money, but the system itself. So number one rule, my goal is my room, my office, or whatever, whereas my monitors are locked or not. That's it. Do you have this rule or not? You need to have a bunch of other rules. For example, I never trade when I'm drunk. Yeah, EMA on a 1 minute or a 5 minute. Okay. You need to understand that, use your common sense, that when you use it on a 1 minute, you probably will have a couple crosses, maybe even 3 of them. So you need to like eyeball it, and if in 1 minute you're seeing the third cross of those EMAs, then it's probably more conservative and not aggressive on your part. If you enter in a first intersection on a 1 minute, this is aggressive. Use your common sense. I'm not babysitting anyone. You actually, I know you are adult, okay? There's a bunch of, you must use your common sense, okay? If you aggressively enter, then you need to be ready for the drawbacks. When the price is going on the corridor on the right, it can go 1 week. There was one trade I was waiting for a week. I entered on a 1 minute too early in corridor, and then it's just like a smack down the way I needed to, and I made it instantly like a super profit. Okay, so you never know how long the price is gonna go on a side. I highly recommend. Let's say there's a pullback. Okay, let's say there's like a price is going boom, and then it's like okay, and it's coming back. This was very obvious, by the way, on the Canadian dollar, okay? When price reversal back to the main trend direction, or it can be like this direction, I highly recommend, if you want to get 100% win rate, not just to make money today, but 100% win rate freaking system, then in the perfect system, sorry for this, guys, you wait first attempt to going back down toward direction you're waiting, second attempt, and you enter at least on a third one. Notice this. This you may miss because the price may go down, but if you enter on a third wave or a third attempt going down toward the direction you're expecting, or like over here, the first attempt, first wave, second attempt, third attempt, okay, third or fourth attempt, a most 3 or 4, the most successful, safest enter. So when you're using when I was using those EMAs, on a 1 minute, you must use this rule. If you use it on a 5 minute, then probably 2 waves, maybe even sometimes in a 1 wave, yeah, and you can enter on a 5 minute time frame, okay? Because that's exactly what I was doing on a 5 minute and a 1 minute. So I think that I answered your question, but when you trade the pullbacks, and you're thinking that to enter these numbers of waves, equally great on the pullbacks as well. Now, but there's other factors. For example, if you understand the Wyckoff, a little bit, or price action money, I mean, smart money, price action, whatever concept, you know that before the price is leaving this side, the price loves to do this way. This is the inducement or false break or whatever you call it. After this false break out, the price most likely to go over there or over here. The price is, if the price is making significantly grabbing this liquidity, they call it liquidity here, or tops or bottoms or whatever, they grabbing it this side, and then the price is going over there. So there's a few co-factors you need to factor in. Okay, it's not just like simply I'm telling you only 2 emails, but at that time I didn't know even anything. Okay, anything else I didn't know about this price action movement. But this is another super simple, super important co-factor that another person last week on one of the famous interview as a millionaire was explaining. He never enter without this factor, inducement or bluffing. I call it bluffing, okay? That's my terminology. There's a gazillions of way to explain it, okay? When the price is getting out of the range in the wrong direction first, then going into the right direction, that is the trigger. Or at least, yeah. So anyway, so there's always a bunch of the other co-factors, but this one is also addition to your super simple freaking system. This is the screenshot of the same chart. You see now, guys, this is the screenshot. Okay, when I was talking to you, that this is the trap sellers, right? I mean, buyers, trap buyers here, trap buyers here, trap buyers here. I mean, trap buyers over here. So we're seeing that the price was moving here, but definitely the trapped buyers were sitting here, and there's a 77 on this green bubble. Okay, now you see the price, where it's supposed to go? Price supposed to go and unlock them. And then the price is going what? That was a pullback, and this pullback is absolutely perfect Wyckoff reversal. Absolute. I mean, like gold really love the Wyckoff reversals. Wyckoff, it's one of the type of the structure that still works, even it's like too old. But the structure of Wyckoff reversal structure really works. Now you can see it, you can draw it, you can play with that. If you don't have a concept how the Wyckoff works, there's the 4 phases inside of that. And you must, it is one of the things that you must learn in regarding the price actions. Now the price is supposed to come over here, right? Let me move this chart out. Boom. Instantly. Life. What? I'm a freaking profit or what? And this is the objective. Those buyers stuck over here, 77, I can make it larger for you guys. If this chart will let me. 71, that's probably, okay. So, and then look, right above, we're seeing 78 above. You see these guys, 78. I'm seeing them on a level 2 data. I know that this is the place that liquidity is sitting right here. The price is always going what? To unlock these poor buyers in the trap, from the trap, and then grab that liquidity. Now, this liquidity, when I look at this chart, I know it's freaking real. It's not a market maker. How the price action people can see the market maker? They don't see the market maker at all. They don't know what kind of animal it is. They can make hypotheses about that. But now, right now, how do I see the market maker? And I see where the real liquidity, because sometimes you can mismatch liquidity for the market maker. This 240 is the market maker. Why? Because simply MBO tells me that this Guyana color 240, this one, and this pink 240 is the same. It is the guardians above and below for the price not to skew if somebody decides to buy or sell too much. That's what they're doing. They're always moving. They're always moving up and down. They not stay in the same place. I can filter them out. My programmer's already working. If you wanted to filter them out of the heat map, that's what the bookmap.com never able and capable to do. There's no any other heat map that capable to remove the market maker, but you will get it in your hands, okay? But this is the market maker. So the market maker is really awesome, where you want to exit or you want to put your stop to protect yourself. That's additional information. At the same time, when you want to trade, you want to see real liquidity, you simply dismiss the market maker. You look for where the real liquidity is sitting. Like, this is real liquidity. This is real liquidity. This is real liquidity. This one is real liquidity. So there's a more contract sitting over here, and it's more natural than the one large, huge 240. That's one of the reasons I show you on the gold, because you can see this 240 sticking to compare with other contracts that people put out there very vividly. Look, this is 240, right? The pink one. Now, if we scroll up, this is 300. What? 300. The nearby real liquidity is 59. This is the 59 or 70, okay? So 70, 59, whatever different time. We know it on a heat map. It was about what? 60, whatever, 70, 50, whatever. It's various, but it's a 59 right now. But this is 300. This is the market maker. Now, we know that this is a market maker because this is the protection. So there's usually on any chart, there's 2 layers of protection. This is the 2 levels or layers of protection. If you're just looking at the price action, you never seeing that, you never understand that. This is the DOM level 2. You see this? Level 2 doesn't distinguish, don't give you understanding if this is a market maker or not, because you see it in the same color. You only see the total numbers. That's what the level 2 DOM capable to show. That's it. There's a pulling and stacking with the pink, and there's a total pulling and stacking. This is additional. Pulling and stacking, this is basically the icebergs that the bookmap.com is using as the icebergs. They're using stacking as the icebergs. When you see the pink at the very left, this is a new, like over here, new orders, and they call it as an iceberg. This is the stacking, and they call it as a synthetic icebergs. Yeah, that definition is right, but they have no idea how to distinguish between these. Is that a real orders, or it's simply a market maker moving up and down? You see now the market maker removed from here, and we see it in the pink outline. You see this one, pink outline? Now we know that they removed out of here. This is the pulling and stacking indicator. But the most DOMs don't even have that function. Now you see that they actually moved up and down. This is the market maker. or I simply I'm going to turn on the DOM, the MBO, and now you see the guys. Now I can see it. Do you see the difference between the regular level 2 DOM and the MBO DOM? How much information you gaining? You're actually getting the number. You see, you can colorize it in a different way that it's gonna make sense for you. The whole point, what I'm making is the chart should make sense for you. And this is where you coming in. Number one job is for you and me, for any serious trader to sit and tune up the charts all day long. The way the charts is going to scream to you information that triggers you execution or help you to stay away from execution. That's the whole way. If you guys asking me, hey, could you give me your templates? Yeah, I can give you templates. Absolutely. I love it too. But then on gold, I just, I don't tune it, okay, too much. But on ES or NQ or any other instruments, that's what I do. And I experiment and I experiment and I experiment. Okay, we have two different heat maps, by the way, right now. We have two different heat maps. Heat map that actually, like this one, that is the same gold. Instead of 2 minutes, it's sitting right now on the 15 seconds. And this heat map is colorized with the red and green. Is that easy to see? Yeah. Does it make sense? Yeah. Just by looking at this heat map, I can tell you the story of this price. And I can justify you with much more evidence and factors why the price moving and where I'm expecting the price to move to. The different way you tune that heat map, this is the heat map from the past DOM, let you seeing a different picture. Go on my homepage on bestorderflow.com and see the way that I trade only a heat map and these three indicators at the bottom and with the footprint, because footprint shows really well the pullbacks and the factors. I can sit with you individually, by the way, and name you 6 cofactors for reversal, how to identify a reversal. I started it with the footprint, and I start using the footprint and volumes in the footer. And this is what I say, it is the speed of market. And pulling and stocking is supposed to be like another indicator, third one on top of it. It shows the momentum as well. So I use the footprint for the trading pullbacks. It is the best tools that shows the traders that fall into the trap, traders that it shows the absorption really well. The footprint itself, with the way that you can tune it, I should make another session, okay, specifically for the pullbacks and the reversals. Now with these tools, key point, all of my presentation today about the indicators, we trading complete. Again, we trading complete order flow. The order flow is level 1, footprint, aggressive side of the market. Combine it in interaction with the level 2, passive side of the market. Because the order flow of the order happens in the interaction between level 1 and level 2. This is what the order flow is. Price action people trade order flow as the price flow. Visual flow. The footprint people trade aggressive side of that, and they think that, oh, I trade all of it. If I have a footprint, boom, boom, boom. You seeing only half of the order flow. The other half is on level 2 and immediate situation on the level 3. If you're not trading complete order flow, then you have a missing puzzles. What I don't have on my chart. If you don't have a complete order flow, then you trade 1/2 of that, or maybe 1/3 of that, or maybe price action. We trade data indicators because the other indicators, it is the derivative of the EMAs, Bollinger Bands, whatever. There's thousands of them. It's a derivatives of the EMAs. It's a mathematical calculations. What you're seeing in front of you right now is the new type of indicators that most people never use. What you're seeing right now in front of you, level 3, level 2, level 1 together. The other ingredient, if you take anything out of this webinar today, it is the hours you spend. Do you guys remember that I shared with you 100% system that I was sick? I'm sick and tired of showing to other people my 100% results, because it's again 100% and 100% and 100%. When I stick to my rules, by the way, uh, uh, rules number 1, it is the business rule. Second, rules number 2, set of the rules. It is the trading set of the rules. Rules number 4, it is your system rules, rules for entering, rules for exiting, and rules for extreme situations. What you do in an extreme situation. So you need to have all these 3 set of rules. And inside of the trading system, you must have rules that conservative or aggressive that you follow to the tooth. And where you put your exit and stops, and rule for extreme situation, what you do if there's some kind of unexpected things happens, you need to have the rule beforehand. This is why I don't believe anybody who's saying the trading, it is a psychology. You no longer need to experience psychological nightmare in any sense if you have a really good set of rules of your trading system. And these 3 set of rules, one is in general your business. I start talking about like I never trade while I'm drunk. Some of my friends do trade when they drunk, and they so sorry about that. I don't drink at all. I don't need to have this rule. I have the other type of rules, what session I trade and so on. So you need to have a 3 set of rules. And inside of your system, you need to have a 3 set of rules. Nobody gonna give it to you. You need to develop it on your own. Another thing is, after you put together, you wrote on the piece of paper what I just told you, what you're seeing in front of you. This is my presentation. You remember, guys, I came up with a 100 system. It's called a Sniper MBO. How did I come up with this Sniper MBO system? Nobody ever told me how to trade the MBO together with the heat map. I was simply observing, observing, and observing, and observing, eyeballing. I have 2 other monitors where the charts are running, and I eyeballing them, I seeing them. And when I see a great situation, look, at the beginning I was giving to you, I noticed some consistent patterns on the MBO combined with the heat map. Okay, this is the MBO, right? I start noticing the patterns. Now, look, first I put in front of you, I put 10 rules. Sniper MBO is a rebounds from the strong levels, right? Can you do it 100%? Yeah. If you do it conservatively, you can do 100%. Okay. If you follow, where is this rule? If you follow these rules, and first I put like 10 or 12 rules, right? With this MBO, Sniper MBO, you can make for the rest of your life. You don't need anything. Okay. Here's the chart. Let me show you this chart. Here we go. This is the chart, right? If you collect the statistics about the one instrument that you are trading, these statistics, then you will know if you get a drawdown then what you're supposed to expect. It's very rarely where you can lose. When you collect the statistics, you can collect even half of that. Make much simpler. Then you will know about this instrument. So you will know the particular instrument like your wife, okay? That you spend like 40 years together. Again, that's when you collect the statistics, you significantly diminish the risk of the drawdown. Or if you get in drawdown, then you know what is your risk and how far your stop loss supposed to be, or what you need to do. Okay. Right now, you see, look, how many slides right now? This is the end. This is what I was putting yesterday about the utilizing the heat map together with them volume profile. You see the price came into the low node on the volume profile precisely. So now when you have this, you understand the structure, what people saying on the price action structure, you understand it much more faster before it happens. You can predict the price. Yes, absolutely. So I was doing a few slides like this. Now here's my slide about reversal pattern. So I always looking about the cofactors, and I see it on the heat map that is in a ledger package, or I seeing it on a heat map that is on a pass dom. There is easy to see absorption, large bubbles, absorption, large bubbles, absorption. That was the heat map volume over here. That price just like once, second, and now we are making a W support and we're going up. Why are we going up? Because on this chart, I can easily see the smallest, shortest candle is sitting right freaking here. That was the first wave, second wave, third wave, and we bam. Do you guys see that? Now, this is the smallest point. The smallest candle is sitting right freaking here, okay? And then after the smallest point, and the volume over here was minimum volume. That's because the fight is no longer there. They're not fighting with each other. The price just like, pew. No, this is the smallest candle, and there's the smallest volume. Smallest size candle, smallest volume. Boom. Another factor is right here. When the price is going up on a heat map, I am seeing immediate support on the heat map, immediate, close to the candle, close to the candle, close to the candle. If you want to know the support on a heat map, you always look on the right side of the movement, not on the left side, because the left side will be taking. Left side over here will be taking. On the right side of the chart, not on the left side of the chart, not on the left side of the chart. Look at the current situation on the right, okay? That is the rule. If you just remember this rule, that is a system on its own. But I give you that as a cofactor. So there's a bunch of the cofactors you can incorporate when you decide what cofactors is important for you. You can tune the charts the way that makes sense for you. You can tune the footprint. You can tune the heat map. You can tune the MBO. You can tune other indicators at the footer and make killing. Make the system that speaks to you. When the system is speaking to you, it is your own system. Believe me, nothing is better than to have your own trading system. I started with 10 rules, and now I have 70 slides. I'm always eyeballing, and I'm coming up with the new things that nobody told me. What, I'm genius? Guys, I'm an average brain. I'm actually below the average brain. All I do, I tune the chart, I tune the chart, I tune the chart until the charts start talking to me. Until you start tuning the charts and start talking to you, you will not getting so much excitement, fun, and clarity. The chart's supposed to give you a clarity. The chart's supposed to give you a signals. Dump any other people's systems. Dump. The only system that you will be successful is going to be your own system, period. If you rely on collecting some other good information from other people, from other systems, do it. Do it. Absolutely. Do you guys see that I'm openly sharing with you so many different nuggets? On each nugget, I can spend 3 hours when you have it clear, when you have it talking to you, the charts, when you tune the charts that it talks to you, the way you eye seeing, the way you mouse is moving, the way that you feel, the way that you experience, nobody can repeat, and you will probably have a hard time to follow other people's systems. So when you follow other people's systems, my recommendations, take what is useful, notice the points that they are eyeballing, volume, delta, or combination of the cofactors, notice those points, and then take a one instrument that is easier, like gold right now is easier for me. Look at this very screen, what you're seeing that if you are day trading, you need too much efforts and emotions. And when you're seeing the sniper MBO, all you need is simply sitting and waiting. Sometimes you can wait like a half of the day, by the way. I'm not lying to you. I've done it. But you simply wait for the strongest level, bounce from the strongest level. That's it. You have no idea how the price is going to go there. Not important. You don't even have to think about the structure, muse, anything. You just wait for the price to come and visit that strong point. But you see, like, for example, if you're seeing this level for a long time sitting over here, the price came and boom, it's bouncing. Will you grab 10 ticks? Yeah. Will you grab 20? Depending on the instrument, you will grab 20. Now, I'm coming back to the very beginning of my presentation. Do you want to trade what you can control on a short period of time? Or do you want to trade something that you have no control over? I made my choice. I want to trade in a very short period of time and for sure grab out of 10 ticks. I put my profit for 5, and I guarantee get before 5 ticks. Guys, if you tell me that this system is not 100% win rate, it's only because you never check it, you never tested yourself. It must be 100% win rate, because you always will grab 3, 4, 5 ticks without idea how the price is gonna get there. Price is always moving, and everybody, you already know this. Price is moving from the liquidity to another liquidity. Bingo. Bingo. That's the one single freaking rule. So this is it. This is my way, how I build this system. This is the best order flow website. Watch all of this, and you will see that I'm using only order flow and 3 footprint indicators. I mean, footer indicators with the dome on the right side, with the pulling and stocking. This system really a killer. This system, watch it, guys. I wasted so many years, and only when the indicators start showing me the clarity that I needed and start make sense and for me, I start make money. And that stuff like pullbacks on this video, on this video, on this video, it works and works and works and works and works. And MBO, sniper MBO with the MBO indicator works really well. So my point is, traders, some of them millionaires, my friends, when they look at this side, they told me, Oleg, you a stupid moron. You should charge for these videos to be public. You should charge money. People don't understand the value of that because it's free. You need to develop your own system based on the picture that you can read the chart and you can make sense out of that. If you follow the rules that I counted today, a few of them, you can make it. Yes, absolutely. You can make it. If you follow the rules, then if you learn how to tune the indicators, simply tune and tune and tune until you see what you need to see. You need to choose those simple rules. The simpler, the better. The less sophisticated the rules, the better the system is. And it's supposed to be the system with the factors or the cofactors that belong to you, because it's the way that you seeing, you reacting, you psychology, you brain, you experience, your intuition. Don't believe anyone, including me. When you rely on you in that system, that partially you can take from me or from others or combine it, and it's going to be your system. You will never will find a peace of mind, and you will never find the results that will be based only on the system that you cherish and you love, because it is your own system. Every significant trader trade their own system. Even they may call it, oh, I trade the pullback. There's 10 people on the same webinar can trade the pullbacks, and we are not going to be the same traders. I encourage you to take responsibility in your own hands, grow up, use common sense. You will believe in trading only when you believe in you. If you don't believe in you, that's the number one problem with you trading.